Hello and welcome to the S2P Pirls Market Commentary, Market Week ending Friday, March 1st, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 2.01 to 1.81, still in strongly bullish territory. The total count of securities in bullish or bearish patterns decreased 4% to 2,279. The count of bearish stocks increased 3%, while the count of stocks in bullish patterns decreased 7%. The S2P Pirls PNF Market Breadth Summary Chart shows us a market now 10 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting S2PMarketSignal.com, clicking on Membership, clicking on Sign Up. There is available a 2-week free evaluation membership in case you're not quite sure if you want to be a trend follower using the market signal. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 97 points for the 11th drop in 23 weeks. At a positive 423.06 points, it remains above the November 2011 top, the January 2011 top, the November 2011 top, the September 2012 top, the November 2011 top, the July 2012 top, the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but remains below the February 2012 top and the February 2013 top. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 3 accumulation days and 3 distribution days. Of the other indexes, the S&P 500 deposit receipts ended in accumulation mode, while the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CCI 20 daily as of Friday 3/1 close has 6 days below zero to begin a Woody's downtrend. We are within the plus or minus 50 range for a valid zero-line reject signal, and our trade simulation will go short at Monday 3/4 open. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 3 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly now has 9 weeks above zero and began a Woody's uptrend 3 weeks ago. At 82.75, it is outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 industries are fractionally positive, and all of the bottom 5 industries are negative. Bullish, S&P Retail has entered the top 5. Gold and silver remains in and continues to lead the bottom 5. Oil services has entered the bottom 5. Bearish, networkers, disk drives, and networkers in the bottom 5. Brokers, REITs have the 5. Focus this week. Billionaires dumping stocks, economist knows why. This article is a sales pitch in no way connected with S2P market signal, but we think it is a worthwhile read. The following are a few quotes from the article. Quote, "In the last fitting for Buffett's holding company, Berkshire Hathaway, Buffett has been drastically reducing his exposure to stocks that depend on consumer purchasing habits." End quote. Quote, "Unfortunately, Buffett isn't alone." End quote. Quote, "It's very likely that these professional investors are aware of specific research that points toward a massive market correction, as much as 90%, end quote. Quote, Wiedemer calmly laid out a clear explanation of why a large drop of some sort is a virtual certainty. It starts with the reckless strategy of the Federal Reserve to print a massive amount of money out of thin air in an attempt to stimulate the economy. Companies will be spending more money on borrowing costs than business expansion costs. That means lower profit margins, lower dividends, and less hiring, plus more layoffs." End quote. A lot of that is opinion, and as we stated, it is advertising, and sometimes advertising tends to be somewhat dramatic. However, corrections happen, don't they? It's always good to be prepared. Thank you for joining us for this week's market commentary, which is submitted by Donald Pearl, Jr. We hope that you will have a pleasant week coming up, great success in the markets, and happy trading.